Welcome to the Daily Market Recap, a detailed review of the market structure and the key support and resistance levels in the S&P 500 E-mini. Today is Tuesday, October 22nd, 2013. I'm Bill Duryea with Follow the Bots. The rally that began when the S&P 500 traded above the 1700 price level and auctioned above the prior multi-year high at 1727 continued another up leg during today's session. S&P futures rallied up to 1754, pulled back to retest support at the prior high, and auctioned back up at or near the opening range high into Tuesday's close. After trading up to 1742 and pulling back to retest support at the prior high at 1734, S&P futures auctioned back up to Monday's high in the overnight session. At Tuesday's open, S&P futures broke out above the minor overnight high and traded up to 1754. The rally quickly reversed direction and price pulled back to the prior fractal highs and paused down at or near 1742, 1743. The market spent the remainder of the session auctioning up off the low and traded back up to 1753, closing the session at 1749. For a detailed review of today's market developments, we'll focus our analysis on the 5-tick range chart. Here we see the modest higher high that developed prior to the release of today's jobs report. Prior to the jobs number being released, the computerized trading programs were initiating trade to the buy side. The market paused ahead of the release, and when the data became public, the S&P exponentially auctioned up to the new high at or near 1755. As the market auctioned up to 1755, price discovery encountered statistically high responsive selling. The computerized buy programs ceased executing to the buy side, and high-frequency selling accompanied the pullback down to the prior high. As the S&P pulled back to the previous high, the computerized programs ceased executing to the sell side. The market held support at the previous high, and each subsequent downtick was met with high volume initiated buying. The buying continued as the S&P auctioned back up at or near 1754, at which point the buy programs ceased executing buy-side trade and the market pulled back modestly at the close. Coming into Wednesday's session, minor support is located at today's low, the fractal highs that developed at or near 1742. Beneath today's low, the next support level is located down at 1734, the lows that developed during Monday's session. The most significant support level is located down at 1727, the prior multi-year high from which the S&P has staged its rally up to the new stopping point at 1754. Above today's high, the next estimated resistance level is located at 1758. That concludes today's recap of the S&P 500 E-mini. If you would like to follow our real-time commentary, we invite you to visit us online at www.followthebots.com. Log on and join us some morning at the open.